Good morning, this is Mayor Vacancy with Driving Markets, driving while talking about markets. Let's kick off. So the markets are continuing moving higher. There's no end to the move up. For nearly 8 weeks, maybe 8.5 weeks now, the Nasdaq, S&P and the Dow have reached sky high levels. They're going to continue rising all the way through to the holiday period because they want to reach highs in order to report to their corporate clients what a great year they've had, give those corporate clients huge profits, and then the market in 2024 is likely to sink. What's going to happen is follows. You've got, since COVID-19, the Chinese flu, corona, whatever you want to call it, the pandemic, what's happened is effectively there's been full employment. The reason why there's been full employment is because a lot of people died, a lot of people voluntarily left the sales force, and a lot of people were just paid to leave the sales force due to the massive payouts by the UK, Europe, US, Canadian governments. So they just actually went home and decided not to work. They called it change of lifestyle. Another word is simple laziness or don't want to work. As a result of that, you got huge vacancies available because people were not coming to work, and therefore full employment rose. You got full employment in the economy. Job vacancies have been consistently high over the last 2 years since the end of the pandemic, and that's caused wage inflation, and obviously people are open to jobs. However, the available job openings has decreased and is reducing. Not only that, in the States, the Bureau of Labor Statistics, the BLS, came out with a job openings or job vacancy report last 2 weeks ago that showed a major drop in job openings. That is a concern. So employment is what's kept the market going, even though it's been fake because of all those people from the pandemic had been in jobs. Then you'd have unemployment at 6.5–7%, which where it was just before the 2008 crash back in the banking crisis where Lehman Bear Stearns went bust. So what you've got effectively is you've got high unemployment but high unofficial unemployment. You're going to have rising higher official unemployment in 2024, and that is going to impact corporate earnings and obviously going to impact inland revenue to the different jurisdictions, to the different countries. As a result of that, less revenue coming in, the countries are going to print more debt, or going to issue more debt, issue more bonds in order to finance the operation of that particular country. So rising unemployment is what's going to push financial markets down. However, in the US, there is a phenomenon where in this election year, markets don't fall. It's not good for the holding administration at the time that markets fall. In 2024, we could see an aberration where markets will fall significantly, round about, some are saying 40–50%, I'd say at least 30% drop in financial markets. That means everything at this stage, which is super high, will be 30% to 50% cheaper in a year's time, according to that analysis, and according to that theory. So we are heading for a major drop. Call it a crash, call it a major drop, call it a correction, whatever you want to call it. The markets are going to go down due to rising unemployment. People in employment at the moment are holding on to their jobs or trying to take on 2 jobs in order to get through the month, because the cost of living is still rising, inflation is still sticky, in the words of Jerome Powell, quote, head of the Fed, and therefore you're going to have solid inflation, you're going to have rising prices, even though at a lower, slower rate, still going to have rising prices with rising unemployment in 2024. You need to be prepared for that. It's, even though it sounds doom and gloom, it's not doom and gloom, it's just a fact of the end of the economic growth. It'll go on for about 18 months before the Fed comes along, pumps in a load of money, or the UK banks, or whatever the case may be, they'll pump in huge amounts of money, reflate the economy, rising inflation, pull back. It's a boom and bust scenario. That's it for now. You can share, subscribe, comment. This is Mayor Vacancy with Driving Markets. Have a great day.